Hey guys, Forex from BK Forex. Welcome to our weekly Forex technicals for 9/15/9/22. Fed looms large. As always, trading foreign exchange or margin carries a high level of risk and may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the associated with trading margin. Seek advice from a financial advisor if you have any doubts. Well, it's definitely going to be Fed week next week. All focus will be on FOMC on Wednesday. But I think the interesting thing about the price action is just how indecisive it is. I mean, the euro basically just touching up and down, this 32, 30, 33.25, 32.50 range for the last 3 days, just doing nothing. We came back off the lows, kind of petering out right in front of here. A hold on a taper could push us to a test of this 34.25, 34.50 level. But to break it, I think we need a little bit more significant numbers than that. It would just basically require, I think, a situation where you have better improvement in the in the European zone, and the Fed communicating that they're not going to taper for the foreseeable future, basically completely changing expectations of the market. I think that's highly unlikely, but nevertheless, always possible. It's the currency market. The point being is, I think when you look at technicals, this resistance level is very, very severe, and to overcome it, you really need significant amount of push to go right through it. Excuse me just a second. To go right through it. So you possibly have two scenarios developing here. You sort of have a test and perhaps a rejection over here, or if the Fed does indeed taper, then this becomes a lower high, and we could drift all the way back down towards the 31. 31 becomes now very, very key support, of course, for the euro on any dollar positive move, just to see how well it holds over here. But as you can see, the price action here just very, very, even on a longer term basis, just very, very indecisive. And we're trading smaller ranges with tighter numbers, and the market basically really doesn't know where it wants to go, and that's what you see in the euro on a very clear way. Dollar yen is also failing in front of the 100 today. I think the biggest story from this week on dollar yen was the fact that we had the failure at 100 twice, suggesting that there is clearly some skepticism and perhaps even doubt as to the Fed taper. And of course, if the Fed doesn't taper, I think this is one of the currency pairs that gets the biggest hit and could possibly drift all the way down to like 97s on the bottom, because especially depending on what they communicate on Wednesday. The top side here, you really would need a pretty hawkish sounding statement out of the Fed where they will say, yes, we're tapering, that we believe the economy is on the right track, and there is very little that we need to do going further as far as accommodative policy. If that is the case, if the Fed sort of shrugs off the latest soft data and goes forward with a all guns roaring kind of a message, then you definitely have a chance here of pushing through the 101s and maybe even the 101.50. That becomes the 101.50 becomes the very, very key test level to the top side. But that would require, I think, a very unlikely scenario of an uber hawkish Fed. Nevertheless, could happen. The key levels here again: hold of the 100 and then a break of the 150 towards the 101.50 as the key level. On the downside, of course, the support has been coming in around 98.50, but I think that if you have a negative message, that could get broken, and really the big support comes in around 97. If you can hold support 97, then maybe dollar yen kind of sort of stabilizes. But overall, same kind of a situation. You just don't have a lot of clarity here. You basically have smaller highs, a diminution of the dollar rally continuously, but not in any significant way. You sort of have, really what you have is lower highs, higher lows, which basically again says in dollar yen, market has no clue where it's going or where it wants to go. It's trendless and difficult to kind of handicap. The biggest trend and the clearest trend is, of course, in cable. And I think if you do have a dovish statement from the Fed, cable is the primary beneficiary of this move, because you broke out the new highs, we're holding above highs. The UK data is the best in the G20, and this seems to be the clear winner so far on the trade up. So if you get positive UK news in a sense that you get negative US news, you do have a chance here of pushing all the way out to the 160s next week. And I think that's probably the clearest and the cleanest bet to the long side if you don't like the dollar trade. And the Aussie is also very much stalling, doing nothing. You know, we petered out because the Australian data was just so horrid, and now we're sort of holding out around the 92s. There is definitely a chance that Aussie could come back. That's the 93.50s if we have a negative dollar story that is the Fed basically remains off taper. But how far beyond it can push, given the very ugly fundamentals, is an open question. A better trade on the calm dollars, if you hate the dollar and think the Fed folds, right? Um, sorry, let me just find this. I'm trying to, looking for, where's my Kiwi? Here's my Kiwi. Um, this is definitely a better trade. I mean, Kiwi sort of touched the highs here, did a double top, and has not been able to break through. So there's always a danger here that it could also begin to fade. But on a relative basis, I think Kiwi kind of begins to outperform here as well. So if we can recapture this 81.70, 82s really do come into view with a strong probability. And really, after that, the resistance doesn't really come in until you get this move towards the 83s. So also, on a relative basis, kind of an interesting trade. Dollar CAD, also I think a better trade than Aussie dollar, although this 103 was very, very stiff support for dollar CAD. And it's a question also here of the fact that if US is dovish, it's not clear just how much benefit dollar CAD is going to get, especially given the fact you get this 103, 102.50 just rock solid support here for dollar CAD that needs to break. It does break it to the downside, and we do have a chance here of pushing ourselves into the 101s, which is a very, very key level. But for now, this seems to be pretty strong support. And any kind of actually positive dollar news, that is the Fed doing something significant about the taper, pushes us right back to 104s, really 104.50s. Again, sort of edges of the range. This has been a beautiful market for range traders, horrendous market for momentum traders. But as always in FX, when one environment dominates, it's the other one begins to build the building blocks for it happening. So while it's certainly been a range trader's delight, I think that the range ideas may soon begin to peter out as we start to get a little more clarity on the direction of the FX. But for now, certainly it's been a range trader's delight as far as trading goes. The crosses, the interesting story in the crosses was this one. We had, of course, the fade in the euro pound that just crushed it, went all the way down to, what was the, yeah, it was 83.50s. We took out the 84s, and that was one of the reasons why the euro just failed. The stop deluge once we broke the 83.90s was very, very significant. So euro pound seems to be a very clear trade to the downside so far. Again, this is showing pound strength. Also, if you look at not so much on the yens, but again, if you get a positive dollar story and you don't want to trade the dollar, one idea that you may want to consider next week on the FOMC is the cable yen story. I'm just sorry, I'm trying to find the pound yen story. So pound yen definitely kind of petering out here, but a positive dollar story I don't think is going to hurt cable as much and will help dollar yen significantly. Of course, in other words, dollar yen above 100, pound doesn't go much below, I think, 57.50, maybe 57. The relative trade here could take us straight up again towards the 158s, 159s, possibly even 160s. So there's several ways to kind of trade the FOMC story. Negative dollar story, pound dollar to 160. Positive dollar story without you having to trade through the dollar, maybe pound yen towards the 160, which I think is kind of interesting because of its unique equality at this point. So that's sort of how everything shapes up. I mean, that is going to be the dominant theme. It's not like everything is crystal clear as far as the charts go. It's not like everything is in a beautiful uptrend. But there are some possibilities and some prospects amidst what I would call a morass of range trading. And as I said, if you're a range trader, this is a perfect environment for you. If you're momentum, this is just killing you. But remember, every market environment changes as it goes forward. So I'm wishing you guys the best of luck and the best of trading. This is Boris Schlossberg for BK Forex. I'll see you guys next week.